Hello, hello, hello. Testing 1, 2, 3. Mic testing 1, 2, 3. How's everyone doing today? Here. Testing. All right. Welcome to Al Stock Trades. Hope everyone's doing well today. Happy 3-day weekend. And just wanted to go ahead and make an important video. We really did some amazing advancements in our stock terminal. And we're going to present with you 3 case studies. Relax. It's a weekend. Sit back. And I normally don't drink. But today I'm having this product of UK, Samuel Smith's organic chocolate stout. It's a very nice little drink. So relax, sit back. This is probably going to give me a headache. I'm not really a drinker, but it tastes really good. So I'm just going to have a little bit, right? So let's go ahead and let's get started. So in this video, what we're going to be doing is we're about to basically share with you how Wall Street makes money. Now, we've been explaining this and trying to basically scratch at the surface, but I've been having the data. And unfortunately, the data isn't like an Excel file, so it's a little bit inaccessible for retail investors because you got to have Excel and all these things. And a lot of our members were saying, Al, can you just have it in an image? And doing that is very difficult, right? So in the beginning of I relied on Morningstar. In fact, a lot of value investors relied on Morningstar. And unfortunately, after the big squeeze of GameStop, AMC, and, it's funny, a lot of these institutions started to restrict free access to retail investors for the financial information. But what's interesting? They've also restricted it to their paying customers. Can you believe it or not? So not only do they don't have that sheet I used to use, they don't even have it now for paying customers. And there's just no way you can do a proper analysis without that information. You would have to basically go ahead and scavenge multiple financial statements, balance sheets, income statements, cash flows, just to be able to get at the situation and then be able to recalculate all of the ratios over time. So it just becomes impossible. So we went ahead and we just basically did this. And this is very important because what I'm about to show you right now is 3 case studies. And then we're going to go ahead and relate it to Clover Health. And I'm going to share with you how the rich get rich in this country. Okay. I'm about to show you the secret, all right, of how the billionaires become billionaires and millionaires become millionaires, etc. This is not a get rich quick scheme. This is not a what you might see on other places, unfortunately, in the world we live in. But I'm telling you right now, I'm about to show you examples, and then you'll come to the conclusion. I won't tell you the conclusion. You will come to the conclusion to see exactly how the hell to make millions of billions of dollars in the stock market. So let's go ahead. I talked it up. Let me go ahead and show you proof. All right. So let's go ahead and open up the stock terminal and do, cheers, right? Cheers. Mm-hmm. So what we're going to do, and for all the people on our Mastering a Stock Terminal, this will be also a tutorial on how to do this as well. So what we want to do is you want to open up your help menu on the stock terminal, right? You don't have to once you learn the command, but it's just good to know. These are all the things you can use. We're going to just go ahead and press Master Analysis, okay? So what I want you to do next is I want you to type in or just press Wall Street, okay? Just click on Wall Street. You click on that, it's going to ask you for a ticker symbol. So in this first example, we're going to go ahead and do Tesla. We're going to type in Tesla. It's going to fetch the data. It's going to process the data, and it's going to share it with you in such a beautiful way that you're going to love it, right? And as you can see, here's the image automatically just like that. But right now, What is this? What am I looking at? Well, let's click on it so we can get a better picture. Okay. Let's go ahead and zoom in a little bit here just so we can get a good understanding. Again, for people that are on their phones, I highly suggest logging on a computer. If you can see this, then don't listen to me, but I honestly think it's a little hard to see this, right? So this is about 10 years of financial data for Tesla, and these are important numbers to look at, okay? What I want you to do in these exercises, we can go ahead and take a look at a revenue, how revenue is increasing, how essentially, you got net income increasing, which is, we're going to look at that for sure. But I want us to focus on some topics that are important. So this is the financial data. And what I want you to do is let's just go ahead and do this exercise. This is very simple. I want us to go down the free cash flow. You see where my mouse is? You see where the free cash flow is? We're going to go ahead and follow it. And I want you to figure out, when does it turn positive? Okay. So it's negative here, negative, 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 negative. Oh, positive, 968 million. Interestingly, it went from 4 billion to like 222 million. So, I mean, obviously 2017, 2018, I'll be like, kind of like Clover Health, right? How Clover Health went from like a higher negative free cash flow to a lower negative free cash flow. And then hopefully it'll turn positive. So in 2019, it turned positive. Okay. So remember that 2019, Tesla turned free cash flow positive. Okay. Let's go here. Let's go to the Tesla stock. Okay. We'll go to Tesla. Go to Max. So 2019, the stock, let me go ahead here. The stock was, I don't know, trading at, 20, 19, 20, I'll call it $20. Stock was trading at $20. All right, ladies and gentlemen. Okay. So then now let's go back to this graph here. Let's go back to this table. Let's go to net income. All right. Now I want you to tell me when it turns positive. So it's negative, 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 up 690 million positive. So 2020 is when they became net income positive. So remember, 2019 is when they become free cash flow positive. And then 2020 is when they become net income positive. So let's go here and let's see what happened. Here's 2019. Let's go all the way up to 2020. Oh, you're over 236%. Oh, you're over 1,000%. Oh, you're over 2,000%. Okay. So so then the question now is, well, okay, Al. Okay, I get it. If a company goes from net income negative to positive to free cash flow negative to positive, we're going to see some money. The question is, when do I sell? How do I know it's about to go down? I've been saying it for the longest time, ladies and gentlemen. Intrinsic value calculation. Intrinsic value calculation. I'm going to say it again. Intrinsic value calculation. All right. Al, you know what, Al? I don't believe you, Al. This is just one company. This is Tesla. I think people just got lucky on Tesla. Okay, that's fine. If you didn't say that, I wouldn't call you smart. So that's why we have 3 case studies. Let's look at the second case study. Hey, yo. How you doing? Top G. I need to get some abs for that. Right? All right. So let's go ahead and let's now look at AMD. So we're going to go to Wall Street. The code is Wall Street. We're going to type in AMD. We're going to go ahead, fetch the data, process it, put it in a way to make you money. And we're going to go ahead and get AMD. All right. We're going to go ahead and zoom in a little bit so you can see. And then now what I want you to do is let's do the same thing. Let's go to free cash flow. Tell me when it turned negative. AMD is a little tricky, but guess what? Tell me when it turned from negative to positive. Negative, negative, negative. Up 13 million. 2016. But guess what? it went to negative. Oh, and 2019, it went 276 million. But again, let's say, for example, you're like, man, I'm going to go in hard. I'm going to buy a lot in 2016. So let's go ahead. Let's see what was the price of AMD at 2016. Let's go ahead and scroll it down a little bit so we can see, right? It's important to see right here. Let me just, right there. 2016 AMD was $2.20. But Al, it went negative again. But hold on. 2016 and 2019 is when they shifted a little bit from negative to positive, right? But did we do net income? Let's go ahead and do net income. All right, net income, negative. Oh, 2017, they went ahead and became 43 million positive, and then they became positive after that. So let's look at net income. So 2016 is when they became positive free cash flow for the first time, even if they dip. And 2017 is when they became net income positive. Wow, that's a 600% return. 6x your money. You put in $1, you get $6 back. You put in $100,000, you get $600,000 back. You put in $1 million, you get $6 million back. You put in $1 billion, you got essentially $6 billion back. But then hold on, Al, how do I know if it's not going to go up more? Like I told you, the 3 words I said: intrinsic value calculation. If you calculate the price target of AMD, you would have gotten in the upper 100 range. Guess what? You just basically 76x'd your money, right? You put in 100,000, you walk out with 7.6 million. Is that right? Maybe. Okay, let's go. But Al, you talked about Tesla, you talked about NVIDIA. I don't believe you, man. Show me another example. Show me if this actually works. You're full of crap, Al. I just don't believe it, how it's that easy. I don't believe it. All right, that's fine. I'll show you another example. Let's go ahead and let's type in another example. Let's go to our handy dandy notebook, right? Handy dandy stock terminal. We'll go down to Wall Street. Okay. Let's type in Enphase. Okay. Let's go ahead, type in Enphase, right? Drink some. How you doing? Hey. Happy 3-day weekend. All right. This is Enphase. Let's go ahead and do exactly what we've been doing. Let's go ahead and let's make it a little bigger so we can all see, because, it's hard for me to see these numbers. I don't know about you. I had to zoom in a little bit. So let's go ahead. Let me go ahead and cut this off. So, I want you to see this. So let's go to free cash flow and let's do the same exercise. Tell me when it turned positive. All right. Okay. Positive in 2014. We got some positive in 2014. So we'll look at 2014. Negative, positive in 2018. Okay. All right. So 2014, it would have alerted me. Let me put in some money in here. Let me do some calculations in 2014. So let's go to Enphase and let's see how much Enphase was worth in 2014. So 2014 Enphase was around $7. Okay. But then all of a sudden it turned back negative. So then you're like, okay, what's going on? Right? So it turned back negative. So then I would say, when did it become free cash flow positive again? 2018. Let's go to 2018. So you go, oh my God. Enphase went from $7 down to $2, down to $1.77. It's a crap stock. There's going to be retail investors saying it's a crap stock. I hate this stock. Whoever this, scam off, right? Whoever owned this company, right? They took my money, right? All the, bullshit blame that people do. 2018, they became positive free cash flow again. So you go in 2018, the price is around $1.95. The stock was $1.95 on January 19 of 2018. Okay. We already know that this company has some prospects in 2014. We see the stock at $1.95. You're like, oh my God, this company is going to become profitable. And then you go in and you hammer down. So now let's go. When does it become net income? Positive, negative. So go net income. We go negative, 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 negative. Up. 2019 became positive, 161 million. Okay. Their gross margins are improving. Their revenue is increasing. So there's other things to look at, right? Book value went up, right? But again, I'm just trying to focus on two things here. Okay. There's more to it that you can accurately hit 2018 over 2014. But again, I'm just showing you one pattern. 2019, they became free cash flow positive. Al, show me the goddamn chart. I want to see. All right. Yes, sir. So let's go ahead and go 2018 when it became 2018 January when it became free cash flow positive, huh? $1.95. Let's go down to 2020. 2020, it became net income positive. Oh, would you look at that? You're up 2,004%. That's 24x your money. But Al, when do I know when to sell? Intrinsic value calculation. Intrinsic value calculation. Oh, you calculate the value. Oh, well, look at that. 17,000%. I don't even know how many X's that is. Well, let's go ahead and do the math. 17,000 divided by 100. Wow, that's 170x your money. For every dollar you put in, you get $170 back. So let's do the math. You go ahead and let's say you invest $10,000. You get back 1.7 million. You just turned 10 grand into 1.7 million. Let's say you put in $100,000. Okay, well now you just took 100,000 and turned it into 17 million. Are you starting to see the pattern? Now again, be like, Al, you know what, Al? I don't believe you, Al. I don't know. Like, you're talking retrospect. How did you know about Enphase before? Well, I'm hopeful that YouTube will show the stock that I talked about way back when. Here it is. Enphase price target 1 year ago. Okay. I made a price target and I said, you know what? It's most likely time to sell. Interestingly, if you go ahead and all right, I was a little intense. We did analysis here, and then we did the calculation, and we said it could go all the way up to 496, but we said we're going to go ahead, and the base is 327. So if we go to Enphase, the highest was what? 393. Look at that, right? But I said, you know what? It's getting too risky. I don't want to get it up here. I already got it at a lower price. I'm okay selling at whatever, $210, right? Well, did you look at that? You see this little base here, 210, it's failed that, and then now it went crashing down. I needed to redo my analysis to see if, something has changed and see if I can make money again. All right. So again, what I have here, ladies and gentlemen, what I have here in front of me is something that does not exist online. We are the only place in the internet that has this. You don't believe me? Go check it for yourself. This is a sheet of paper where you can just basically pop stocks in after you search for them, which we'll show, and it will get you in a position where you'll be able to understand the company. This gives you a snapshot, 10 years of how the company performed. I don't care about the promises they made now. I want to know, how have they performed over the past 10 years? Are they reliable? Are they good people? Do they care about the business? Have they diluted shareholders? It seems that there, some dilution here, but again, dilution is warranted because look at how fast they're growing, guys. Okay. So as you can see, these are the secrets of Wall Street. You might say, Al, that's a strong statement. How is this not available for people? Of course, it's available, but I'll tell you for who. It's available for people that have Bloomberg terminals. Literally, a sheet like this exists. You know what? I don't want to get your sheet, Al. I think I would rather go to Bloomberg. Dude, please do. But guess how much Bloomberg terminals cost? A Bloomberg terminal costs $2,000 per month. So essentially, a Bloomberg terminal costs $24,000 a year. You see how inaccessible this is for the retail investor? So what do we charge? We charge $20 a month, $19.99 for everything we offer, and we offer a lot. Okay. Mastering, if you want lifetime access, we also offer mastering, and it has even more. And it even has the intrinsic value calculation. Again, I'm not trying to promote this. I'm just trying to share with you this exists. Al, why the hell are you charging? You think this data is free? You think this took me a year to build, right? This is expensive stuff, okay? So again, I'm going to go ahead and I'm going to be very upset at my subscribers if you don't come online right now and have a little chat with me. So I'm going to put the link down here. This is a live. And if you don't click on this and talk with me, I'm going to be a little butthurt. Okay. I'm going to be a little sad. Okay. I want to hear your reaction to what I just showed you. I want to hear it because, again, you can't talk to your neighbor down in Joe Schmo land because they'll tell you a stock market is a scam. You want to find a group of people that are your people and your tribe where you can talk to stuff, okay? And why not use the internet to come together and talk about this? Because if you go down your neighbors or your friends, most likely they're not going to understand this. You got to find your people, okay? If you don't want to open up your camera, that's fine. You could just open up your microphone. Let's have a talk. Let's have a podcast. Right? It's your voice. That's it. You hear me? So log in. Let's have a talk. All right. I'm going to read here. Good data is the real gold. Not many people know how to find the right roads. Absolutely. So in terms of, the definitions of these numbers, what does revenue mean? What does gross profit ratio mean? What is payout ratio? I'm already creating book chapters. I think I got up to shares. I'm going to create the rest of these book chapters and I'm going to put them in the Mastering Stock Market course. But what I'm also going to do, I'm going to publish another book. And people, I think I'm going to make it at least max, maybe 100 pages. And it's 100 pages that explain essentially this sheet and what essentially these financial terminology metrics are. And I think it's going to be priced at $15 or $10. I'm just going to make it really cheap, right? And I'm going to probably make it hardcover, so it's you can it'll last the test of time. Speaking about publishing a book, if you go ahead and if you go on Amazon.com, and if you go ahead and you type in my name, Albert Allen, you'll see a book titled The Intelligent Investor. I wrote this book. It's for the modern reader. It's finally available in hardcover and paperback. Again, I'll be getting the paperback version tomorrow in the hardcover, so just keep it on the radar. I'll make a video in the next 2 weeks to tell you if it's what you will call it, quality control check. The inside of the book is perfect. I just want to see if the cover will look good. Again, quality and control and all that stuff. So I went, as you can see, I went ahead and purchased it myself to see. Again, I care about quality, and I want you guys to have a good book. Clove Party. Oh yes. So yeah, any good news? You just reminded me. Here I am getting excited. Well, first off, log on here and come on my live and let's have a discussion. Now I have a nice drink. You don't have to turn on your camera. I get it. It gets a little bit kind of, people don't like to talk in the camera. I get it. But, log on. Let's have a talk. Ask me questions. I want to know what you think about the information I just shared with you, because I can tell you, they don't teach us in high school. They don't teach us in college. And they certainly don't teach us in the real world. This is just basically taught in small groups in finance, people on Wall Street. But guess what? I've studied all the billionaires. I studied them all, right? And I used my medical school brain that has been trained to learn a corpus amount of data, and I applied it to the world of finance to bring to you and teach you this information. So to answer Craig's question, any good news with Clover? So let's go ahead. Let's type in Wall Street. Let's type in Clover Health. So we're going to process the data, get the data from Clove, and there's the data. It's a little small. Well, of course, it just became public. So we go ahead. Let's go to free cash flow. Free cash flow, negative, 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 negative. A smaller negative, negative 72 million. You see how we're swooping down? So why not out? Why not jump in this company when, it's a positive free cash flow? You certainly can, but tell me a stock that's dropped more than 90%. Doesn't really happen a lot, ladies and gentlemen, but when it certainly does, I salivate like crazy. Net income, negative, 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 negative. All right, so now we're going to see, didn't they become almost EBITDA profitable? EBITDA, not like real profitability this year. Yes, in the next 2 years, we are going to see some magic. Watch something here. Look at gross profit ratio. 0, negative 5, 0.7, 22%. Holy smoking hallelujahs. That's something different. And we showed some numbers yesterday as well. Watch those videos. Again, there's going to be other videos I'm going to make, and I'm going to share with you how to search for, undervalued stocks that, could 10x, but at least will double, right? And I'm going to make that video, but the unfortunate part, we can search them, we can find them, but we have to set a price target. And then how do we set a price target? What's the word? Intrinsic value calculation. All right. Well, guys, it seems to me that you guys don't even want to log in and talk with me. I mean, do I bite? Come on, again, this is your guys' channel. This is an open channel, and it's good to have a conversation, right? So log in. Let's have a talk. All right. It's good to do it now because I'm not going to be on YouTube for the next 2 weeks. I'm going to go to DC, so I'm not really going to be on YouTube. So this will be one of the last videos for a while. Nothing really interesting happening in 2 weeks, not that I'm aware of. I might do a YouTube live. We'll see. Share with you the book, see how it looks like, get excited. But yeah, so that's all I have for you guys. I hope that this video is helpful. I know my videos are long, but again, I'm trying to, every video I make, I want you to walk out with something, right? I want you to come out of this learning something, right? Because I will buy a mic. We can talk. Honestly, you can use your phone. You can use your phone mic or you can use it's actually a good mic on your phone, surprisingly. I record videos on my phone for a good chunk if you don't remember my lives on the phone. You can also use your mic on the computer, or if you have some AirPods. It's okay if your mic is not the best. It's fine. Whoever judges is not even is not going to be rich. If that makes sense, right? What do I mean by that? There are many people in this world. In psychology, they teach us this. They say, you know what? When someone listens to a lecture, they like to look at a couple of components. The first component is how the presenter presents, right? Are they presenting in a very sophisticated manner? The second group of people look at how the person is dressed. Are they dressed in a well thought out manner? Now, unfortunately, in medical school, in professional schools, and the world we live in, people tend to focus on these two things. And unfortunately, those folks don't tend to do, from a monetary perspective, that well, right? I believe the third way is listening to the content of what the person is saying. The content is gold, right? You got to look at the content. You got to listen, even in music. I mean, Tupac, for all the people that listen to hip hop, Tupac said, don't listen to the beat, listen to the music, listen to the words, listen to the poetry, listen to what they're saying, right? Unfortunately, there's a lot of people who just bob their heads down because it looks good music video, good editing. If you don't believe me, look at the YouTubers on YouTube that act like they know about stock market. They just know how to make good YouTube videos, and they're great entertainers. But do they even look at these numbers? Of course not. Why? Because this takes time, right? This takes someone that has knowledge. And if you want to get in the market, you need to learn this knowledge. You need to be knowledgeable about this, because if not, then you should not enter the market. The market's not easy, right? Looks like we have someone called John. John's on. Device not connected. They will need to connect their mic before you add them to the stream. All right, John. You have to connect your mic. I don't know how it looks like. So you know what I'm going to do? John, as you're connecting, this is going to probably be a bad idea. I'm sorry if it's going to be interference. Oh, I got Minirev here. Add to the stream. Can you hear me? Never mind. It looks like I have.
Hey, can you hear me?
Yeah, I can hear you. How you doing?
Yeah, good. Thank you.
Of course. Yeah. Yeah. So what do you think about all this?
Yeah, I can hear you. How you doing? Okay. So, well, I'm following you since December last year.
Wonderful.
And, well, I must say I've learned a lot. So, thank you. Thank you very much for that.
Of course.
And, my work is in the hospital, and I work at the dermatology, and where work with I'm not sure how to say it in English. I'm from the Netherlands, so
I love the Netherlands. I have a software developer in the Netherlands, actually.
Oh, really? So you've been there a couple of times?
I haven't been there, but I work with the software developer online.
Okay.
I have an aunt that not an aunt, like an aunt-in-law that is a professor in Netherlands that she teaches statistics.
Okay.
Small world, huh? She's a PhD.
Yeah. So fun.
Netherlands, very smart people, very smart, incredibly talented group of people. They know their software. They know that they're very smart folks. They're good at math, neurosurgery. Yeah. They're good too. My mentor went to the Netherlands and did a lot of amygdala hippocamptomies, a lot of brain surgery there. Yeah.
Yeah, we're also doing some studies on genomes. You're also familiar with that, right?
Oh yeah. So I'm actually presenting a talk in DC. It's titled Andrew. Let me go ahead and look at the make sure I get the right title here. It's such a long title. I want to make sure I get it right. So essentially, we did RNA transcriptome sequencing, and we looked at the cells to see that traffic from the brain to look at any genes that are associated. So the title of the study is Altered Androgenic Signaling Modulates Synaptic Plasticity in Human Hippocampal Tissue of Patients with High Seizure Frequency Temporal Lobe Epilepsy. Pretty cool, huh?
Very interesting.
Yeah.
Very interesting.
Yeah, no.
So
very exciting. Yeah.
So I guess everybody is very excited for the couple of months that are ahead are ahead. So I think for CLOV, in the beginning of next year, we will see some pretty nice upwards moves, I guess. What do you think?
Absolutely. No, I definitely, for some reason, I got a private chat from John. It's not allowing me to use my mic, but it's okay. I sold, wait, oops, sorry. Yeah. Sorry, John. I'm sorry that you're not able to connect. I'm going to play around with it on my phone, but yeah, about Clover. Yeah. So, you know, the thing with retail investors is that, you know, it's easy to tell when you have a good company and a bad company. The problem with retail investors is, you know, like I'll give you an example. Is Apple a good company or a bad company? Yes or no? Good or bad?
Good company.
Good company,
I would say.
Mm-hmm. But let's say I invest at Apple, and this is actually part of my book in The Intelligent Investor. We talk about this. Let's say, for example, the Apple stock price is $500. It's currently around 170 right now. And let's say I buy Apple right now at $500 a share. Is that a good company or bad company?
If you buy it at a too high price, I wouldn't buy it.
Exactly. It's a trick question. It's still a good company, but you're buying it overvalued. So
yes,
it's actually bad invest. It's bad, right? But the problem is, you know, how do you determine what the price of a company should be? And that's when you do the intrinsic value calculation. That's when you calculate the value. Have you seen me do that, right?
Yeah.
Yeah. And it's pretty accurate. It's pretty good. Unfortunately, retail investors, they don't know when they get in and when they get out. They just don't know. They don't have that. And they don't have the data to help them make that move. So right now, just like how a company can become overvalued, Clover has become very very, very undervalued. I didn't expect it to go that. I mean, I just, you know, the last time this happened on a grand scale was early 2000s in the dot-com bubble crash. We saw a 90% drop. So I think in the next 12 months to a year, we are going to start seeing Clover start going and ascending and trading at a premium to its book value. And once it becomes profitable, and then the economy, let's say the Federal Reserve drops interest rates, and then they turn on their growth machine, I think Clover is going to explode. The question now, though, is based off of the financial metrics of whatever X number of months they're in. We can calculate the intrinsic value and we can see, well, maybe it'll go past this intrinsic value. Let's say intrinsic value is 20. I'll give you a number. Let's say it goes to 50, right? So sometimes the stock market likes to go from undervalued to overvalued, but overall it just bounces back near the intrinsic value. That makes sense.
Yeah. So it's most of the time, most of the time a bipolar reaction. If you look at it,
it's all it is. It's emotion. Yeah. When I see a stock price, all I see is emotion. I see people are not stable. People are either very excited or very sad. And you got to use math to calculate the value and just hone in on your math skills. And that's all it is. I got a message here. That's Rudy. Hey, what's up, Mr. Al? You're amazing. I really appreciate all your help. Just wanted to ask if we could stay away from profanity. Oh, my bad. When did I use that? Maybe I slip up sometimes. Whoopsies. But yeah, so that's kind of the idea. Do you like the financial sheet that we created?
Yes, I do. And I think that the data that you use is very, very helpful. And but I was wondering, you built the terminal yourself?
Yeah. So we built the terminal. It was a group effort. We got no, yeah, love you too, Rudy. Love you too. Most likely, probably sometimes, most definitely. Yeah. Sometimes I get a little too passionate. Yeah. So built a terminal with again with the software developer from Netherlands. Very nice
Really?
gentleman. Oh yeah, yeah. Again, it's a small world. We live in a small world, and yeah, it was a global effort. And unfortunately, this is how software development works. They know so much of a little bit of every different field, but you give them the direct, like okay, this is what needs. We want to create this. Let's create this. And yeah, we just do that, and we're going to continue building. We're going to. There's other things I want you to see, and the price of the terminal is really cheap. Is $19.99 a month, and all of it gets reinvested back in the business. I'm, again, as people that are in medicine in the United States, they do relatively well. They don't really, need money. So I just said, this is a nice hobby for me to build this stock terminal. And yeah, so it's relatively inexpensive. We have a mastering stock market course, which is lifetime stock terminal. But you can finance it with PayPal, 0% interest. Some people have gotten 24 months, 0% interest, and then you own the stock terminal for as long as I live, pretty much. And hopefully I'll be able to give it to somebody else in the future, and they'll be able to take it over. Yeah.
Okay.
Yeah. So it's not bad. It's good data. You're not going to find this, especially with one sheet. It just doesn't exist, which is why I had to curate it. I was actually, when I created the Mastering Stock Market course, we were actually using Morningstar, but then Morningstar,
yeah, I know.
Yeah, they took it away, and they don't even. So I said it's okay. They take it away. So I paid for a membership. I'm like, where is it? And then I messaged them, oh yeah, we don't have it anymore, even for your paid members. Yeah, we don't. I'm like, what? That doesn't make any sense.
Yeah.
So yeah. So yeah. Sorry. Go ahead.
Yeah. When I started in the stock market, the first 12 months, I relied on information that wasn't correct or complete, and made many mistakes. And the more I realized that quality information is the key to success.
Yes.
And the research is very important. And then when that's completed, you have to make a good starting point. So when I invested in CLOV, the stock price was 90 cents. And that was my starting point.
Good.
And I waited, I believe, I waited 10 months before I've invested it, because it was tumbling down. And but also thanks to you, I got the right starting point. Very excited. And in a way,
good price. You got better than Chamath.
yeah. But in a way, it's very exciting. And on the other hand, I almost can't wait to see where this is going.
Oh yeah, no, I'm so excited. Every time I go to sleep, I think about it. I'm like, man, this thing is gonna. This is great, because it's nice and all to do this on your own with AMD and Enphase and Nvidia and Tesla and all the other companies that I've looked at. But it's so nice to actually do it on YouTube and to kind of track the progress of things. And it's just interesting because, like, when the stock does explode in the future, there's going to be a lot of people that are going to go back to these videos. It's like, holy shit, they knew from at $1.
Yeah.
Where was I? Man, I wish I saw these videos. Man, I wish I was in these videos. I wish I saw it.
Do
Yeah.
you know? Do you remember the stock videos from Clover from Sean?
No, how?
You know, you have to look it up on YouTube.
Tell me about it.
Sean
What is it? What did he
stock.
say? Or her?
Well, Sean was, I guess, the perfect pumper for Glove.
Was he probably squeezed, right? Probably in the upper 20s or
Yeah,
something.
yeah. In 2001, he was the perfect pumper.
Yeah, and not knowing. You see, I've noticed on YouTube, there's a lot of people that show you like the technical analysis and then the graph. But anybody has that data. Everyone has technical analysis data. You can get it on your phone on Weeble. But they know nothing about the company. It's
Well, the fun part is when you look at his videos. So in the first, he's very exciting, and when time goes on, you see that he's getting doubts, and in the end, he leaves, and
he left.
everybody says, "Sean, where you go?" And what you see,
wait, Sean Stocks.
yeah,
Oh
Sean
yeah,
starts.
yeah, I remember. Yeah, somebody sent me their video, and he, I think where did he? Is he? Yeah, I remember that. Yeah, is he okay? Is he just gone?
Yeah, he just left. But I what I find fascinating is, well, so many people see this person as an anchor, right?
Yeah, yeah.
So when he quits, a lot of retail investors start to doubt and also quit. And
It sucks. It sucks. It really
yeah,
sucks.
yeah.
Yeah,
And you see that
yeah.
for retail investors, investing is something more social than something more, how do I say, more
Academic, grounded by mathematics.
academic. Yes,
Yeah,
yes.
yeah.
So
But
I guess,
it's okay because you can make money. You can make money off. My apologies for people that are. I don't mean to offend anyone, but you can make money off of people's stupidity.
yeah, sure.
That's
But in a way, we as retail investors, we're really small, right? In a way,
very small, extremely small.
yeah. And so, in a way, this is a game of information.
Who has the most
And when
information? You hit it. You hit it right. It's the game of information. You hit it right on the dot.
Yes, and what you do, well, what I do is that I look at it as a chess play. So I look ahead and I look at what kinds of options I have, and on that I buy or I sell. And for Glove, it's fun because I bought at the right time.
You're up almost
Yeah.
100%. Almost right. Very excellent. Very excellent.
Yeah.
And it's interesting because I play chess. I was actually on the chess team in high school. I was
Really?
Yeah, I played varsity, and I believe I came in the top 6 in the state of Arizona. But I wasn't able to continue. I would have. I know I would have won number 1, but if you know my story about my life, there's a lot of environmental problems I've had that I wasn't able to have the money or just the time to do that. But chess, honestly, I think chess is what has differentiated my life when I compare. When I know you're not supposed to compare, but when I compare my life to my colleagues and the people around me, because people act on emotion. I take the
Yes,
emotion. Yeah, I take it
that
and I yeah
you hit the nail,
yeah
because when you're in a chess game, you can play out of your emotion, right? Or you can look ahead, and that's exactly what the stock market is.
absolutely. It's a chess game, and
Yes,
exactly. And then you yeah, I mean you look ahead and people play with their emotions and then they lose because they leave their queen open for a pin. They don't look at the knight that can fork the king and the rook. They lose a rook, which is considered 5 points in a game. A rook is 5 points. A bishop and a knight is worth 3 to 4 points, depending if it's the beginning of the game and the end of the game. Um, it, it, people don't. You ask people, like to my friends watching the video on YouTube. Go down the street, go to your mall, just go somewhere, go to a bar, ask somebody. Hey, do you are you good at math? You're gonna get a lot of no's and some yeses, and then ask the second question: are you good at chess? Oh, I don't play chess. Oh, I hate chess. I don't know nothing about chess. I play checkers. Um, the world we live in, not a lot of people like to use their brain. People like to have somebody think for them, uh, and they like to be brainwashed. Uh, you can use that to your advantage in the stock market to make money. That's pretty much as simple as that. Um, so I'll always have an opportunity to make money. It's just it's sad because when I bought shares at 72 cents and when you bought shares at 90 cents, you were buying from somebody who was selling to you that who bought at $20, $15. You understand?
yeah,
And they gave you essentially their money. They what they did is, I'll give you an example. I'm going to give you $100,000. Okay, I have $100,000 cash, but I'm going to sell you this $100,000 in cash. I'm going to sell it to you for $5,000. Does that make sense?
no,
No,
but
but it happens. It happens
there's
every day in the stock market.
mm,
I just don't get it. But I'm grounded by mathematics and logic. I just don't get it. Right? No.
yeah.
Yeah,
Uh,
ridiculous.
it's sad to see so much retail investors going down the drain, if you think about it. And but when you see there is so much manipulation on YouTube
Oh,
about investing, it's crazy.
you
It's
have
it's
you
really
have
crazy.
it's so you have people that there are YouTubers that make money talking about penny stocks and they disclose this guy paid me $15,000 to talk about this stock and people still
Yeah,
buy the stock. As you said,
yeah,
it's a social thing and I'm just like
yeah. So when I started investing,
crazy.
a friend of mine started on eToro with investing,
Yeah.
and he bought his first GameStop shares. So I didn't know anything about GameStop, and he told me about squeeze, etc. And
Yeah.
in the first months, uh, I only looked to try to understand what was happening, and it came to me that it was a hype, and how how the stock was behaving was not normal.
Absolutely.
And what you saw was a total money grab for so many people. But so many people lost their money at the end.
Yeah.
And
Yeah. It's sad. It's sad.
yeah, what I've saw is, well, you can go for a quick money grab, but in the end, most people lose.
It's you got me interested. I want to see the financial sheets for GME. And it made sense to buy it at a certain amount, but let's say free cash flow. Yeah. So if you look at yeah, book value tells you all. Yeah. Interesting. If you go to AMC, AMC is a lot worse financially than GameStop. You can see the book value went to negative. Debt to equity, need to recalculate and calibrate to see. But just look at free cash flow. I mean, they are almost $1 billion negative in free cash flow. What do you think? It's crazy, huh?
Yeah.
And $1 billion negative, almost $1 billion negative in net income. They're literally burning almost $1 billion a year. It's crazy. Yeah, so that's kind of the that's what we preach. You know, that's the that's the goal. I mean, it's unfortunate, but hey, it's online. It's a resource. People just need to listen. I don't like to, before I wanted to make a nice 6-minute, 7-minute video, make it look nice and all, but why am I spending my time? I'd rather spend my time on the analysis.
Yeah.
Like, I don't have time. I'm not a YouTuber.
First books I read was Peter Lynch.
Peter Lynch.
You're familiar. You're familiar. And now I've
of course
read two books about him, and learned very much in a very simple way, by the way. And it's very clear how you have to look at the stock market. And the funny thing is, most of his books are from the 80s, I guess. Yeah. And most of the rules are still up to date. If you read those rules, they still comply.
Well, I'll give you something. I'll give you something even older. The Intelligent Investor, the book I just published, is based off of the original Intelligent Investor, and that was written in 1949, and the rules still apply from there.
Yeah,
isn't that? People are trained. People are trained on. Unfortunately, kind of like iPhone. iPhone 13 is older than iPhone 14, which is older than iPhone 15. But if you look at the Constitution of the United States, we still use it, and it's 250 years old. Yeah. So.
Yeah.
Yeah.
Well, what I find funny is that if you really know how the stock market works, and you really start at a young age, in theory, you can become very wealthy in a short time.
Absolutely.
But most people, when they start with stocks, are most in their 40s, 50s. I
It's hard.
believe.
Yeah, it's hard to be risk taking in that age group
Yes,
because you have
but most.
children, you have family to take care of. And interestingly, Peter Lynch talked about this, I believe, in one of his books. Every 2 years, there's a bear market on average, and every 6 to 7 years, there's a recession. So there's always an opportunity. Like, for example, 2018, there was a drop in stocks, and you could have easily taken advantage of that because 2018 stocks were dropping, but as you saw from the financial sheet, um, companies were becoming free cash flow positive. Like, for example, Enphase dropped to $1.95, $1.95 because of December and all that stuff, right? Stocks were dropping because of Trump and the politics, and then but the fundamentals were getting better. So it's like, why is the stock dropping? Look at Amazon back in 2000. Stocks were dropping. Amazon dropped 90%. But if you look at the fundamentals, Amazon was getting better.
Yeah.
So yeah, there's always opportunity in the market, and you just have to look for it and know how to find it. And we're going to be showing this, and we teach this and all this stuff, but there's always opportunity. Yeah. You just.
But
no.
I also think that most people are short-minded. Think about money in a short time, and so people want to become quick wealthy, and as long as people have that behavior,
you'll make
and
money. You'll make money off of them.
But I think people will have that behavior.
Always.
Always.
It's in the DNA. It's
Yes.
when you educate yourself, you are literally changing the way your brain thinks. You are literally creating synapses that are going against the grain. When you see your stocks fall, you activate your sympathetic nervous system, which is your fight and flight, which, these are little adrenal glands. They sit on top of your kidneys. They secrete this hormone that tells the body, you need to get out of here, because if you don't, you're going to die. This is a natural response. This is a natural response that gets activated.
Yeah, fight and flight.
Exactly. And if you can take that and just say no, shh, focus on the math. You won the game of Wall Street. You won the game. It's that simple. It does not take a genius. It's really that simple. It's very simple.
Yeah, I totally agree.
Yeah,
totally agree.
You just have, yeah.
And still, I think it's when you start investing, it's a lot more harder because it's a new behavior.
Oh, absolutely.
And everything every new behavior has flaws.
Oh yeah, and you have to build it and everything. But yeah, what I'm going to do now is I have to go do some research. I want you to come on the channel again.
Sure.
And I would love to have more discussions, and please, more people come so we can all have like a 5-way, 6-way. It doesn't have to be one person. It can be 5, 6 people, 10 people. We can all come together and have a nice debate and talk about our experiences. And again, this channel, I think that the difference between what my channel is from other people's channel is other people are trying to do YouTube to make money and live off of. I don't need to do that. I make money off of my own life, right? My own endeavors.
Right.
This is a hobby for me. Kind of weird that someone would do all this for a hobby, but again, it's like someone building a car. It's your baby. And the beautiful part about this hobby is it's helping a lot of people. I mean, that's a pretty damn good hobby. I love helping, so it's a pretty good hobby.
Okay, Tal.
Yeah, it was a
I want to
pleasure.
thank you.
No, thank you. And then I also want to say hello to Timon too. He's from Netherlands as well. Good shout out to him. And yeah. So it's an honor. It's an honor and privilege to have you guys. And
thank you so much.
Thank you.
Thank you for your knowledge and your time.
I appreciate it. God bless you. God bless you. No, God bless you. I hope to see you again.
Sure.
Thank you.
Sure thing.
Absolutely. All righty. So yeah, well, that was really, really nice. I really appreciate the beautiful meeting we just had right now. It was a privilege and honor. I encourage others to come in, and I hope you had a great time with Al Stock Trades. I drank only this much, as you can see. I didn't drink too much. I don't drink a lot, and I'm already look at my cheeks. See how red my cheeks are? I can't process alcohol. I have a little bit. It is what it is. All right, ladies and gentlemen, I'll see you on the next one. I'm gonna go do some research.